Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng opened up with gains. We're seeing Taiwan index that's opened up with a slight bit of a gain as well.
75% of S&P 500 finishing in the green last night. It's a decent start. Let's see if this can become bigger or stays here through the course of the day.
Unfortunately, India is one of the countries in our coverage that has the most sensitivity to oil and gas imports within GDP.
We are trading at a 4-year highs onto this one. On a monthly basis, we have gained by 12%, and for this year, it's outperforming various other commodities as well.
The arrest of the Fino Payments Bank CEO, Rishi Gupta, under the GST Act is not likely to have any material impact on the bank itself.
Lastly, it is identified Syrma SGS as one of the top pick within the sector with an overweight rating and a target price of 1,050.
Today the FI seems to be better buyers. And where are they buying? They're buying largely into the power names. So power as a sector is standing out.
Well, the most important, most critical piece of information we have for you right now is that the UAE has continued to come under Iranian missile and drone attacks today.
Those sectors included the likes of pharma, e-commerce, consumer durables, capital goods, and agrochem and petrochem, which have now become the line of fire.
The Nifty above the 23,550 mark, almost nudging the 23,400 mark as well. So overall, it's been a very sharp recovery and mainly led by the banks that has seen a significant recovery from its intraday lows.
Well, it's now a 400-point recovery if you add yesterday's gains and today's 150-point up move on the Nifty. They say solid upward momentum. Markets had gotten a bit oversold, and now you are seeing buying emerging in metals, realty, auto, defense. You're watching Closing Bell. We've got 1 hour to go. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima Tendulkar. With me is Nigel D'Souza. And Nigel, we've reclaimed that 25,550 mark. You know, if you pull up that intraday chart, it got a bit wobbly mid-session. Markets gave up those gains. But again, we've managed to claw back. There you have it. At between 11:45 and 12:15, markets were flat. But the second half of the trading session, solid buying emerging.
Shireen just written me a mail saying, Nigel, you don't go on leave. I'd like to take part of the credit to be the good luck charm. Markets have bounced back. And in the data point that we put out this morning, Rima, with regard to what Samco Securities said, they said that when the markets pull back close to around 5% in a week, the following week we see a 3% bounce, and that's 70% of the times. Let's see whether or not that record can keep, updated, because yesterday and today you put it together, we are 360 points higher. And I'll tell you what, today is the weekly expiry. So some of those short calls, they're going to be in trouble. This market got oversold, and now we're seeing a bit of a bounce. Maybe a close closer to around that 23,590, 23,600 is going to be eyed. We'll analyze the derivative data as well. But pretty good times, in comparison to what we saw last week.
Indeed, 3 consecutive weekly losses for our markets. And this week, we've started off strong. And the Nifty is now pushing towards that 23,600 mark. It's a 500-point rally on the Sensex. Midcaps moving in step. The midcap index is up 0.9%. Strong advanced decline ratio. And some of the big gainers, at least on the large cap screen, Eternal top mover, 6% higher. We'll talk more about what brokerages have to say about Eternal. After a 15% slide since the start of the year, metal seeing buying. So Tata Steel is the second largest mover today, 4% gain. Autos across the board, whether it's M&M, Tata Motors, passenger vehicles, Maruti Suzuki, Eicher Motors. Lots of buying interest visible there. Tata Motors CV has already announced a price hike of about 1.5% following the increase in following the inflationary pressures that we've seen. HDFC Life, BEL, Bharti Airtel also on the buyer's list. How should you position yourself? 1 hour to go. What trades should you take? Mitesh Thakkar, as always, is back with us with a few closing strategies. Mitesh, would you take heart from the kind of up move that we've had in the last 2 trading sessions? And today the dip was bought into, which is a positive sign. What from here on, and what will the calls be?
Good afternoon. So in the extreme short term, maybe yes, because as I've also been saying that we are extremely oversold. So a choppy pullback is what I think will happen. If you get those intraday dips, you'll also get those buying and short covering bouts. And we could be looking at 23,850 as the first target, possibly even 24,200 to 250 zones. But that will only be a retracement. So yeah, for the time being, in the extreme short term, yes, I think the trades should be at least and I said this yesterday as well. The short position should be taken profit at and wait for a bounce back to play. Or if you're a 2-3 day kind of trader, you can even go long. So we have some long set stock conditions right now. PFC is a buy. Keep a stop at about levels of 408.5 and look for target of 425. While there's also a buy on Eternal. I think very strong rebound with good volume. So on a mild pullback around 233, buy with a stop at 228 for targets of 244.5.
Okay. All right. Got that. Thanks a lot for that, Mitesh. Let's focus on a couple of stocks actually that have bounced back in today's trading session. And what such name is Eternal? That stock has seen a big bounce in today's trading session. Mangalam joins us to give us a quick analysis on that particular name. Mangalam.
It's a 6% up move that we're seeing on Eternal right now. It's the top Nifty gainer. But remember, for the last couple of weeks, it has been losing a fair bit of ground. In fact, from its recent peak, the stock is down about 40% as well. So in the pullback that we're seeing in the market, this is one of the bigger buys that we've seen. But the important part is that there is a brokerage note that has come in today as well, and that's from JM Financials. They say that there were 5 reasons, major reasons why the company saw a big decline in its stock price. The one was concerns around leadership changes. Remember the previous quarter, Deepinder Goyal stepped down with Albinder Dinsar taking a day-to-day CEO leadership role, high competitive intensity in quick commerce, new competition coming in food delivery, and then you had the global concerns, which like the likes of the Middle East or the West Asia conflict and artificial intelligence, whether their moats would be questioned around that as well. Now, on that, JM Financial has said that they strongly believe that the company will emerge stronger once the macros normalize. In fact, as near as this quarter itself, the fourth quarter, they believe that Blinkit's net order value is likely to expand by low double digits quarter on quarter, despite high competitive pressures and versus what it was at break-even in the third quarter. More importantly, the food delivery business, they expect the NOV to grow at around 18% in the fourth quarter. And they don't expect a big cut coming in from the LPG crisis. In fact, they've, in their analysis, said that even if 25% of the orders are disrupted in the final weeks of this quarter, that's the month of March, then the NOV will still grow upwards of 15%, and that's a positive. And amidst all of this, the stock correction offers an attractive entry point because it's now trading at just around 35 times March 2028 price to earnings. Their own multiple, if after them having cut it, stands at around 65 times. So their target price is at 400 rupees. They believe that those who are looking at it from a long term, say 15 to 18 months, should be looking at this dip as a buying opportunity. And that's exactly what the street is noticing as well.
Thank you very much for that. Big move seen on that. Dharmesh Kant, Head of Research, Chola Securities, is now joining in. Dharmesh, there were lots of concerns about high valuations, competitive pressures. But after the kind of underperformance that we've seen, the stock price correction, do you think all those, the price currently addresses all the concerns, prices in the concerns that the markets had? And is this an attractive buying opportunity to your mind for the long term?
Yeah, good afternoon, Nima. Thanks for having me for the show. I mean, those concerns are still valid, and I think they are valid for the long term as well. Nothing goes away. It's just a trading opportunity or pop which is there for Eternal. Because, see, but this is a basis point business. I mean, every 5, 10 or 2 basis point you are fighting for to get your margins in place, and the competition is likely to hit up. So as long as they were doing only food delivery business or even the district thing, that was okay. As far as the bookings are concerned. But this quick commerce has taken its toll. And I mean, when it crossed 3 lakh crores of market cap, that day I was there on your channel and I clearly said that it's a sell and it should be, not be in your portfolio for a long-term basis. It went up to 340 or so levels and from there it has corrected. So to my mind, this space is a complete avoid. They may make some profit here and there. But from long-term basis, justification of valuations is very hard to come by.
Got it. Okay. All right. Dharmesh, hi. Good afternoon. Good to see you in. Dharmesh, what about Vare Energies? I recall you timed that stock pretty well, if I remember correctly. You all were bullish, and then I think in one of the interviews around 3,200 odd, you said take money off the table. What's your view on this particular name? Today, it's seeing a bit of a bounce.
Yeah, good afternoon, Nigel, and good to see you back on the screen because the markets have turned around from the day you joined back, and the last week was horrible for the market. So
On
I
a
hope
lighter
was
note, I was
saying
just
to
telling
you.
Rima that
So very much welcome and keep on wearing the.
I was telling Rima that if that was the case, I would not go for the trip only. But give us the analysis on Bari.
Yeah, please do. So as far as Nigel, Wari was concerned, we have, having a buy rating on this from the IPO days, and we rode it all the way to 3,800. That was the price target. But while we was having a coverage on it, we realized that a lot of big players are venturing into this, like Adani and Ambani's and all, Reliance and everything is coming into the play. And eventually, they will still have orders. The run rate of the profitability will still be there for 1 year or 1.5 years or so. But thereafter, they have already hit us selling for future growth prospect. And that is where we took the money off the table. We gave a profit-taking note on that. And from there onwards, we have not, have any new initiation on this. And the reason is very simple. The capacity for way too higher than what the initial expectation was. At the same time, with big players coming into the play, the margins will definitely erode. And the third factor which has been plaguing this entire solar renewable energy space is you can, generate the power soon, but the transmission lines, the power grid and all, those lines are still not there in place. So uplifting of the power from the generation point to the main grid is becoming a challenge. So, I mean, next year would be a difficult one, FY28 and onwards. And that's the reason why we are not even taking it as a trading bet. So staying away from this entire renewable energies, as far as solar panel manufacturers are concerned, is our call. However, on power generators from the renewable energy space, we still are bullish on NTPC Green Energy. They did lag on capacity addition for some time, but now they are catching up. 9.5 gigawatt is the total installed capacity as we speak, and the pace of installation is catching up faster. So next 1 year, it's expected to do a 18 to 19 gigawatt of capacity in place by the end of FY27. And if that happens, then it becomes a very good attractive buy. 140 is the price target which we are having on NTPC Green Energy.
Got it. Okay. All right. So you're optimistic on NTPC Green. I think you've started a bit of a movement though, Dharmesh. I've got a couple of messages from investors. All your leaves are cancelled. They're detrimental for the markets. I need to take care of my family first. But anyway, let's focus on the other stock. The one that's bursting away is MOIL. That's, almost moved to upper circle in today's trading session. Why is that? They have come out with a very, very optimistic production guidance number. Let me explain this to you. For FY21, they did close to around 1.14 million tons. In the last year, they did around 1.8 million tons. But for this year, they are guiding for around 2.35 million tons, which will be a massive growth of more than 20% in terms of production number for FY26 in comparison to FY25. But that's not the surprising part. The surprising part is at the 9-month mark, they've done around 1.4 million tons thereabouts, which means if you derive that, the derived Q4 production number will be close to around 9 lakh tons. That will be close to around double of what they did in Q3. So because they have guided for such an optimistic number of around 2.35 million tons, which means they do 9 lakh tons of production, the street seems to be very, very excited for now. And just to put that into perspective, in FY21, they did close to 1.1 million tons in the full year. Now, for a single quarter, they're talking about 0.9 million tons. So achieving this guidance is going to be very, very important. For the time being, the street has grabbed onto the opportunity. And also, they're talking about their market share by 2030 going to around 32% from around 20% currently. And they're also saying that in terms of production, they'll do around 3.5 million tons. In addition to that, remember, MOIL has some kind of cushion because cash in the books is nearly around 20% of its market capitalization. So put all of that together, a stock that's seen a big correction from the top. For the time being, the analyst meet and the presentation that they put up seems to have excited investors. Stock up 18%. We here at CNBC-TV18 were the first ones to alert you about this. What's your take, Dharmesh, on MOIL?
I mean, stay away is the take. I mean, look at last 4 or 5 years, they have done nothing, hardly any volume growth, and consistent kind of a profitability which they have done. The guidance is very, strong and aggressive, as you have rightly pointed out. You have given all the data tables in place. So if they deliver, then definitely it becomes a good buy. But having my, study of this company over the last 10-15 years, it seems very ambitious and overarching kind of a target which they have set in place. However, it does fall in line with the capacity expansion which is happening for the steel industry for next 4 or 5 years. It's almost 100 million ton of addition would be there, and in line with the aluminium capacity addition as well. So it broadly, thematically, it does fall into place. But the execution challenges will be there. So the proof of the pudding will lie in the Q4 numbers. If they are able to deliver Q4 numbers, then even buying it 10% higher from here will make sense. Otherwise, till that time, let the trade be there. And the other thing is the free float is very less. So again, such news flows trigger a sharp jump where the free float is very less in the liquidity perspective.
We'll take that caution on board, actually, Dharmesh, with regard to them actually achieving what they have set out to do. And I've seen it in the past as well, that sometimes that guidance hasn't been met. And keep in mind, this is a stock that's halved from the peak that we saw just 2 years ago. So take all that caution on board. For the time being, they have said 2.35 million tons. By April, we'll know whether or not they have achieved that 2.35 million tons. Let's talk about a couple of other names. There are strong moves being seen on EMS companies today on the back of a JP Morgan note. Let's go across to Upasana. She'll explain that one to us. Upasana?
Well, certainly, JP Morgan has put the focus light on EMS sector, and it has gone ahead and upgraded 3 stocks within the sector. It has upgraded Sign DLM to overweight from neutral with a target price of 400. Amber Enterprises is the next upgrade, and it has raised the target price to 9,000 per share. It has identified Syrma SGS as one of the top picks for the sector with an overweight rating and a target price of 1,050. Now, it believes that the EMS stock underperformance has led to investors question whether the sector story is over or not. But the brokerage believes that the story is certainly intact and has a positive view overall. It sees every stock barring Dixon delivering more than 20% revenue growth over FY26 to FY28, and it also believes that the sector is upping its value additions, evolving from finished products assembly to a component and a PCB manufacturing companies. Valuations have eased out, seeing the past underperformance seen by various stocks across the sector, but the key risk levels it has identified as 32 to 60 times FY27 estimates for the stocks that miss expectations. It says that the Syrma SGS and Ember are most likely to meet the street expectation. Now, if we look at the consensus rating for all these 3 stocks, it's over 80% of the buy consensus rating which is given. In terms of valuation, Amber trades at 44 times 1 year forward, followed by Syrma SGS at 36 times and Cyient DLM at 24 times. Now, remember, Cyient DLM was at one of the highest points of the day, and it has seen an up move of as high as 11% today, but the stock is still down 40% of its 52-week high. So all in all, certainly the eye on the EMS sector.
Thank you very much for that, Dharmesh. Are you tracking the moves, the recovery, the rebound in EMS stocks, particularly Cyient DLM? Hardest hit, and now it's rebounding the most. Where would you stand now on it?
Yeah, I mean, most of the companies in the EMS space has taken a strong, beating, and they have corrected quite a lot. So valuations have reached to a fair multiples for most of them. But to my mind, I mean, if I have to buy from the space, though we have presently we are not having any recommendation on the entire space. We are watching it from the sidelines. But Dixon stands the best out of the entire pack, given the multi-diversified portfolio it's holding on. They have recently done a deal with the Chinese company, and one more is in the pipeline. So going forward, the margin creative value additions on the product offering which they are having, Dixon stands the best chance out there, and the valuation multiples have softened to 40 times 1 year forward value multiple. And here I tend to differ with the brokerage report which you were just referring to. So to our mind, I mean 35 to 40% is the revenue growth which Dixon is likely to deliver for next 2 consecutive years. So that is there. We are waiting for Q4 numbers and the analyst call after that. And post that, we may be reinitiating our coverage on Dixon Technologies.
Got it. Okay. All right. Thanks a lot, Dharmesh, for joining in and giving us your view on a few of these names. By the way, markets are moving from strength to strength. 23,000, not 25,000. 23,500 is breached, and now we're on the way to around 23,600. Let's see how we end. For the time being, let's slip into a short break. On the other side, we'll have our Alpha Manager of the day, Rahul Veera from Nippon India AIF, will be waiting for us. Welcome back. Well, I think we have some news that's coming out there. NCLT approves Adani resolution plan for Jaiprakash Associates, and they have rejected Vedanta's plea versus Adani Enterprises IBC plan for Jaiprakash Associates. I'll tell you what, this rejection is good for Vedanta shareholders. Vedanta shareholders don't want Vedanta to get very, very ambitious. So that's why I think you'll see that Vedanta stock price actually will not correct on this. It's good news. You know, when the stock was around 400, 450 rupees, we had alerted you that if this goes through, actually, it'll be a bit of a overhang on the stock price because they're going to bite into a large asset which is not really related to their core business. So this rejection, as is the street, is not expecting them to get the Jaiprakash Associates asset. But since, you know, they're actually, it's closing the case with regard to that, and NCLT has rejected their plea as well, it's good. Short point, street doesn't want Jaiprakash Associates to come into Vedanta. They rather go ahead with the core business, the demerger, aluminium business separated, oil and gas business separated, and the street will be happy on that front. And for Adani, well, that business is coming into their fold, which will strengthen part of their cement business as well. So good news for both. Lucky loser for Vedanta and lucky winner for Adani Enterprises as well. That said, let's welcome our next guest. But actually, before that, let's do a quick check onto the F&O markets because, today we have the weekly expiry that will play out as well. One positive that I've been highlighting from yesterday morning itself was that on Friday as well, the Nifty was down 500 points. The India VIX was up only around 4 to around 5%. That told you the VIX is showing signs of peaking out, at least as of now. Yesterday, when we were down 200 points, actually the India VIX didn't shoot up. Normally they move inversely. Now, in today's trading session, there's a substantial cool-off from the high of around 23. That's a big cool-off that we're seeing to sub around 20. India VIX cooling off is a bullish sign. The other positive is, besides the VIX cooling off, is that we have made a higher high and a higher low, both on the Nifty as well as in the Nifty Bank. Thumbs up on that data point as well. Moving to the options data, 23,600 call. The premium out there is quite interesting. Just till a few minutes ago, you were not making any money even if you bought this particular call, because the time value of money is getting eroded. So you've got the direction correct, but that's the strike that we are hovering around currently. Start of today, the premium was around 60 rupees. So the resistance for today is around 23,660. If we can get to that particular level, we can see a further, I think, a 50-100 point bounce from there as well. 23,660 is a crucial resistance mark. And from the word go itself, from the last at least 3 hours or so, we're seeing that 23,500 put is seeing a fair bit of addition, and there is writing being seen at that level. Quickly to run you through a few stocks that are seeing a good amount of movement. On Vari Energies, a stock that's seen a sharp correction, fresh buying is observed out there. It appears as 22,500 rupees. That's the area when people look to build some long positions. That's what's happened today. And KPIT Technologies as well as Nalco, stocks that have got hit in the last few trading sessions, they have come in for a bit of a short covering bounce, and both of them have spurted up. But it's that part of the show when Hormuz joins us. He doesn't want to be kept out of the action. He's going to turn the spotlight on all the top movers at this hour. Hormuz, take it away.
What does not want to be kept out of action definitely is Moil right now. What a move the stock has seen after CNBC-TV18 first reported about their ambitious plans for production. Now the stock is up 20%. This is the biggest single day gain that the stock has seen since May of 24. It snapped a 3-day losing streak today. And after the CNBC-TV18 news break that happened sometime around about 1 o'clock, the stock had seen a very significant spike in volumes as well. Volumes today are the highest now since July of 24. Over 90 lakh shares have been traded. The 20-day average is just 5.5 lakh shares. And out of those 90 lakh shares, 21% of those so far have been marked for delivery. And incidentally, today was the day when the stock had made a 52-week low. So in a single trading session, the stock has seen a 52-week low and a 20% upper circuit as well. The other one, of course, is Eternal, the top gainer on the Nifty today, the second straight day of gains. Yesterday was more significant for Eternal because it snapped an 18-day losing streak in yesterday's trading session. Now, today's volumes have already crossed that of yesterday's, but they aren't as significantly higher, only around 40% above their 20-day average. We had close to 6 crore shares that have been traded. The 20-day average is around 4.5 crore. The premiums on the F&O side, on the 230 rupee call option, is up around 130% as of now. On the put option of the same strike, that premium is down around 56% as we speak. Now, the stock recently made a 52-week low here as well, 209 during that 18-day losing streak, and 43% of the shares that have been traded today so far have been marked for delivery. The third one, of course, Chennai Petro. We spoke about MRPL on Bazaar. The other one that's doing well, has moved in tandem with MRPL, is Chennai Petro. It's gained in 3 out of the last 4 sessions. And during this period, the stock has gained 16%. It's 8.5% in today's session itself. Volumes are the second highest in the month of March. Close to 70 lakh shares have been traded so far. The 20-day average around 19, so it's around 3.5 times its 20-day average. Only 17% of the shares that have been traded so far, though, have been marked for delivery. Then in the last 1 month, the stock is up 20% and is also nearing a 52-week high, which is close to around 1,100 rupees. And lastly, Vari Energies, you just highlighted this in your F&O as well, Nigel. The stock has gained in 5 of the last 6 sessions now, and in these last 6 sessions, today's volumes are the highest during this phase. The most active options this time around are the 3,000 rupee call option and the 2,900 rupee call put option in today's session. 46 lakh shares have been traded so far. The 20-day average of around 18 lakh shares. 15% of those shares have been marked for delivery, and the percentage of shares that have been marked for delivery so far is the lowest since the 22nd of January. And the stock in the month of March, when most of the stocks are down 10-20%, is up 7. This is the first time in the last 4 months that the stock could end the month with some gains.
Thank you very much for that. Let's invite Rahul Veera, Fund Manager, Equity Investments, Nippon India, AIF, on the show. Rahul, thank you very much for joining in. What we're seeing right now is just a tactical bounce, that there is some selling exhaustion, or do you think there is fresh conviction buying that's taking place? And what are you all doing with the money that you all have? Are you all aggressively allocated?
Sure. Hi, good afternoon. As of now, we are incrementally adding just purely basis of the valuation. There are some technical factors that are playing out. Your March end buying that we'll see a little bit here and there from mid-caps, small caps. We are seeing some kind of a pausing from the FIs in terms of the positive news coming from the geopolitical side. So the selling is hopefully going to reduce going further. Incrementally, we are just adding a few names here and there, but remain constructive from a valuation standpoint of view.
All right, just hold on to that thought, Rahul. We have some flashes that are coming in there from Bloomberg. Israel Defense Minister is saying that Iran's security chief, Ali Larijani, is eliminated. There were some reports that were speculating about that. But now on Bloomberg, we have that official comment that's coming in there. Not sure how to read this, but another elimination from Iran's force. And one wonders who exactly is going to be the mediator now. But for the timing, at least, equity markets, they seem to be ignoring these news flows, and they're expecting things actually to de-escalate. And that's why you're seeing global equities itself have done well. So we'll keep an eye out on the bottom of the screen. Do you might want to say something on that front? All right. We'll keep an eye out on that. By the way, just keep an eye out on the Nifty. I just mentioned that 23,660 mark is the important mark, because the premium at the start of today on the 23,600 call was around 60 rupees. And there appears there is some writing out there. So those call writers, they'll be getting a little bit nervous as we are approaching 23,600 plus 60, which is 23,660. Keep an eye out on that mark. Rahul, you must be quite happy with the markets moving up as well. And I think you said that you all were allocating some money as well. Give us 2-3 stocks that you all have added. A simple one.
So I'll be a little bit more on the sector side. We have added some large cap private banks. We prefer these names. Some of them are trading between 1.5 times to 2 times price to book. Given the kind of geopolitical situation, we believe that the whole trade of NBFC to private banks will shift now. Given that the current account deficit, the liquidity system, there will be no further rate cuts. More or less for the private bank going further, the NIMs compression that was taking place will be more or less in 1 or 2 quarters be getting over. And due to the FI selling, there has been decent prices for the private banks that have come. We believe this will be a good entry point for a lot of private banks from here on.
Okay, private banks is one. What about some of these travel and leisure themes? You'll have liked a few of them in the past. For the time being, logically you can't buy into it because of the current uncertainty. But actually, these kind of times, if you get into some of these stocks, whenever the de-escalation takes place, they'll get up and going. How are you all approaching these themes? Hotels, I recall you all did one of those large trades out there, the Taj GVK deal. Are you all adding into travel and leisure stocks?
Yeah, so on the domestic side, right, all the domestic travel and leisure names, we believe are showing a strong growth. Even your RevPAR across the hotel industry continue to remain strong. The debate across the capital markets is whether the RevPARs or the average room rates will continue to grow, or they're going to get stagnated from here on. But we believe that given the demand supply, it's going to continue to move in the upward direction. We are not incrementally allocating, but we have a decent allocation to the some of these names there.
What about auto? The risk is of earnings downgrades on account of inflationary concerns. We've already seen Tata Motors commercial vehicles announcing a price hike. And autos was a sector where we were seeing volume momentum. Ever since the GST cuts in October, the numbers have been very strong. And if you hike too much, then that derails the volume growth story. So where do you stand on autos now?
See, back in 2019, right, when even for two-wheelers, when we moved from BS4 to BS5 and BS6, we saw the very sharp price increases in the two-wheeler segment itself in 2019. So historically, we've seen that once if there is a very sharp price increase, the volume immediately, there is a cliff and which stoops off. And given the valuation that we were standing point, more or less, we believe it could create some negative trigger or the valuation imbalance for the sector. And so we remain a little bit cautious on the auto sector as of now. So volume versus margin play will be a little bit challenging for at this point of time from a valuation standpoint of view.
So cautious across the board on autos?
we remain a little bit cautious there.
Okay, no, I meant that even for commercial vehicles where the narrative was that the CV cycle is just starting and cycles start for 3-4 years. So you're cautious on all passenger vehicles, two-wheelers, CVs, everything?
Absolutely. Given the valuation standpoint of view, we are seeing the volume growth, even if you consider 6% for passenger vehicles, 8 to 10% for two-wheelers, even for commercial vehicles, if you take mid-single digit, we are more or less certain that it is more or less priced in. The sector overall is a little bit on the upper side of the valuation.
Okay, all right. What else? What about metals? Aluminium, you saw a couple of days of profit taking, but the pricing that it's at, $3,400, $3,500 per ton. No one's factoring in a number of $3,100 as well per ton. So it's got a 10% buffer. How are you approaching, say, the ferrous, the non-ferrous names? Even some of these ferrous companies, they have that cushion now. Demand destruction is, I think, an important trigger. For the time being, the street is ignoring that. They're going by pricing and they're expecting things to recover. How do you approach that space?
So we prefer one of the large conglomerate. Plus, there is an incremental trigger there, catalyst. There is a demerger process that is going on for the conglomerate. 50% of the revenues comes from the aluminum side and rest is silver. So, and it has historically it had a very high dividend yield. Given the aluminum cycle, as you rightly mentioned, we prefer that conglomerate is one of the best places to be as of now.
No prizes for guessing. It's Vedanta that you're talking about. The only one that has a little bit of aluminum, a little bit of silver as well. So you'll continue to like that name, right?
Yes.
All right. We appreciate you joining in, Rahul. Thanks a lot for giving us a couple of ideas. Wishing you a good remainder of the day. For the time being, the bulls will be quite happy looking at the screen. Well, markets move in cycles, and for 26 years, we've been tracking them very, very closely. Because in a volatile time, what investors really need is insight, not just information. And above all, perspective, not panic. If you have a question about your investments, we're here to help you with guidance from experienced market experts who understand today's fast-changing market environment. So join our special market editors on Your Stocks and Mutual Fund Corner every day at 2 p.m. and stay one step ahead of the market.
Okay, on the other side of the short break, we'll get to check on dealing rooms. Nimesh joins in with D Street Chatter and a few BTST calls from our experts.
Welcome back. Well, a few stocks actually are doing well. The big boy HDFC Bank, that's moved to the high point of the day. Always helps actually when that big boy gets its form going. But it's that time of the show where we get in Nimesh to tell us what is he picking up in terms of D-Street chatter. Hey, Nimesh, what's happening?
Hi, Nigel. A good recovery for the second consecutive day. And again, the beaten down sectors like metals and autos are helping the Nifty to recover. And of course, the large cap names. Even yesterday, that was a case that the rally was largely led by the large cap names, and that continues in today's market as well. But what is more interesting is the IT index. All the IT stocks were massively under pressure in the first 1 hour of trade on back of massive selling. Looks like that got absorbed, and after that, we've seen a sharp recovery as well in most of the IT stock. In fact, the IT index has recovered almost 2% from the intraday low. So that's also helping the Nifty to gain almost 200 points in today's market. But what is more heartening is that today's recovery seems to be backed by institutional buying. I said this in the afternoon link as well, that the sense that at least I got in today's market is that it's backed by FI buying. If not very large FI buying, at least the FI selling seems to be much lower in today's market. So that's also helping at the margin for the Nifty and the Bank Nifty to recover very smartly in today's market. And the buying seems to be largely in one particular sector, which is the power sector stock. So all the power names are well bid by large institutions in today's market from a flow perspective. Technically, we are heading into that big resistance of 23,800. If that gets taken out, the feedback is that maybe you'll see further sharp short covering rally, at least in the Nifty name. So that's the next level to watch out for. But two things: one, a decent pullback for second day running, and looks like today's pullback is backed by some bit of institutional buying as well.
Wow, that's good news, Nimesh. Good to hear. What about individual stocks? What are you picking up?
Well, the first stock is Urban Company. There was a large block in the pre-open trade, nearly 2.5% equity got changed hands. I understand the pre-IPO investors were sellers in today's block, and a single domestic mutual fund was a buyer. So if there are any disclosures, could be interesting to track in Urban Company. So that's the first name. The second name is Adani Power. I spoke about buying in power names. Adani Power stands out in today's market. So big delivery-based buying is my sense in Adani Power in today's market. So watch out for delivery volumes there. Same with the power theme. Even NHPC, while not big buying, but there are at least bids been shown, interest been shown from large institutions to buy into NHPC at current level. So that's the third name. The last one is ITC. Within the large cap names, ITC is the only stock which stands out in terms of aggressive selling. So expect high delivery volumes, and there is selling even at these levels in ITC from larger institutions.
Thank you very much for that, Nimesh. Let's get in then some BTST calls then. Mitesh is back with us. Mitesh, we almost crossed that 23,600 mark, went to hit a high of 23,650. Now paired a bid, but still hovering with a gain of about 160, 170 points. Crude prices have come off from the highs, and Brent is now below that $103 per barrel. So that is good news. Global markets have largely been firm today. What trades?
I have a BTST on BSC. I think, that's one stock which was flagged as a buy call yesterday as well. The stock pattern is very good, and the indicator setup is also positive. So keep a stop at 29.15 for a target of around 3,000, maybe more over here. And also a BTST on Federal Bank, which I would recommend buying with a stop at 262 for targets of 267.5 to about 268.
Okay, got it. Thanks a lot for that, Mitesh. Well, oil marketing companies, the likes of HPCL, BPCL and IOC, they continue to remain in the spotlight on the back of higher crude prices that have actually just cooled off as per what our ticker team is telling us. Let's go across to Sonal to understand what Kotak has to say on these stocks. Sonal?
Thank you so much for that. Well, yes, these stocks continue to be in focus earlier because of higher Singapore GRMs. Now those GRMs are in the negative, and now we are getting notes cutting target prices as well. There was one yesterday, and today there's one for Kotak Institutional Equities, where they are targeting, or they are estimating high crude prices going forward, $85 per barrel in this fiscal, and the next one at $75 per barrel, which will be because of disruptions that we are seeing in the Strait of Hormuz and West Asia war as well. And that is something which will continue to impact marketing margins of these companies. They also say that since they do not have any retail price changes or modifications that can be done easily, it will hurt companies' margins. And LPG shortages, there's negative public sentiment as well. So the headroom to increase fuel prices despite high crude prices is very less for these companies. OMC, so far, they have benefited from elevated marketing margins. That is because of low crude prices that we saw. But now most of this premium will be done away with because of high crude oil prices that we are seeing. They reiterate their sell rating and they've cut target prices sharply across all the three stocks, more so on HPCL because remember, HPCL has a higher exposure to marketing segment. So yes, the bearish sentiment continues. Now, even on the refining side, we have negative margins. And because they're not able to increase prices, marketing margins will also be impacted. So a twin impact is what we are seeing on OMCs. And with rupee depreciating to record lows, that is another dampener for these companies.
Okay, all right. Thanks a lot for that, Sonal. By the way, I think we need to keep an eye on a couple of stocks, actually, because we're getting some comments that are coming in from the Ministry of Petroleum as well as Gas. And this is the first time I think they're categorically going ahead and saying it, wherever possible, induction cooktops should be used and LPG should be conserved whenever possible. Last week we had a bit of a spurt in stocks like, I think, TDK Prestige as well as Stovecraft. I think, they'll continue to remain in the spotlight, because this is the comments that are coming in from the ministry itself. They are encouraging the use of induction cooktops, and they're saying that LPG actually should be conserved. So I think both these two stocks actually will continue to remain on your radar, both Stovecraft as well as TDK Prestige. We should get actually the line coming up for our viewers on the screen as well. Our ticker team will put that out in just a bit. First time they're actually talking about induction cooktops. Let's welcome Jay Bala, who joins us on the show. Hi, Jay. It's been a while since we spoke. What's the updated call? Are we going down from here, or do you think we made a bit of a bottom at around that 22,900 and we'll, go north from here on?
Hi, Nigel. Good to be speaking to you. I believe the markets have two possibilities. Either the low that the market saw yesterday, 22,955, that's either the bottom. That's not my preference. I would like to see the markets to make one more low below that 22,955. If it does that, then we are looking at a very significant move higher. We're going to be speaking next after 2 weeks, Nigel. I'm going to be away for the next two Tuesdays. So we're going to be speaking in April. So when you speak in April, I expect the markets to be more convincingly bullish, and the doubts that are hanging over the markets, I would have expected that to have evaporated by the time we speak the first week of April. So the second possibility is is my preference for the markets to make the low below yesterday's low of 22,955. So we have when I look at the Bank Nifty or the Nifty, that's the same picture, or even the Nifty IT. So the next low would be a very important low. In the event that the markets have already bottomed yesterday, that's not an ideal scenario for the longer term case, because the markets could rally all the way up to 24,500 or even 25,000. And then it'll come back one more time to 23,000. But in both of those situations, the medium term is bullish for the markets. So let's see what the markets does. We'll evaluate as the markets unfolds.
Got it. All right. Tell us levels that you're looking at just to revise it. Yesterday's low, 22,900. That would be the first level of support?
Yes. And that support below 22,955 is 22,850 and 22,360. So basically, even if the markets were to tank up to 22,360, that wouldn't change my medium-term bullish outlook. I'm not expecting that to happen. I'm expecting the markets to make a fleeting low below 22,955, the low registered yesterday. So, so from a medium-term perspective, the markets are bullish. The short-term resistance are at 24,194 and 24,572. And when you speak the next 2 weeks, I expect crude to have crashed much closer to the $65 mark, and that would have, I believe, would have changed the scenario for a lot of inflation pressures, growth doubts, and all those things.
If you're saying that crude is going to crash to around $65, the markets will get up and running. The mojo will be back. Let's see whether or not that happens. But as you're saying, our next date is in April. Got that. Couple of trading ideas, individual stocks. Let's get that out of the way.
Yeah, the first is I like the ETF, Grow Defense in India ETF. It's trading at about 80 now, a stop loss of 73 there, and it's looking bullish for me from here on. The other pick I have is I'm bullish on Jyoti CNC Automation against the stop loss level of 686. I'm anticipating this to rally to about 860. Maybe it can rally higher. This is a relatively new listing. From the listing low to the all-time high, the stock is pulled back to the recent lows at that's about nearly 50% Fibonacci retracement. And at the low, there's a hammer pattern and there's a positive divergence in the momentum readings. So I anticipate this to at least be a short-term bounce back, if not a change of trend.
Thank you. Jay, we'll come back to you. Just need to get into a break. As we do that, let's also get in an important market voice. Following the geopolitical uncertainty, consequent risk to India's macros and equities, Morgan Stanley, about 10 days back, downgraded India to an equal weight. In an exclusive conversation earlier today, he tells CNBC-TV18 the reason why he downgraded India. He says it's more sensitive to oil and gas imports, and therefore prospects for India are dimming in this environment.
We made a number of changes to our recommendations about 10 days ago, and it's really all to do with the framework that we're in right now in relation to oil and gas supply. It is unfortunate for India because in January, the manufacturing and services PMIs moved up. And we obviously have had significant policy easing in India, and we had been cautiously optimistic about the business cycle turning and running a small overweight. But unfortunately, India is one of the countries in our coverage that has the most sensitivity to oil and gas imports within GDP. It's actually the third highest after Thailand and Korea. And so the prospects for the economy are dimming in this environment. So broadly for Asia Pacific, we are in the world where if we do sustain interruptions to product flowing through the Straits, and you can proxy that through the Brent oil price going to $120 to $130, but obviously some regional benchmarks are well above that, and there's quantity issues as well as price issues. In that world, we would see around 15 to 20% further downside. Broadly, Asia has declined around Asian equities around 8%.
Welcome back. 23,550 on the Nifty. It's a good 100 points off from the session highs. But all in all, we've added about 400 points in the last two trading sessions. Midcaps are outperforming today. The midcap index has got a gain of nearly 1% with an advanced decline ratio standing at 3:2. Jay, would you take comfort from the fact that the IT index managed a recovery from the day's low? It's ending in the red, but there was some buying emerging at lower levels.
Yeah, that's true, Rima. It is doing what is expected to do. The final sequence of the Nifty IT's decline, although it's not complete, but what it is doing right now is within the parameters of its expectation. And I've pointed out that when it broke 30,900, the next support comes at about 26,000. 26,000 is not a round number or an exact number. If the markets were to get close to that, that's good enough. But the price structure is what is important. And TCS, though, is a little bit disappointing within that, but Infosys is starting to look positive. But you have to wait and watch, even from the current levels of about 28,000 and change. If it were to get to 26,000, that could be still a considerable downside. So it's still not yet time to bottom fish here. Let the market signal that it's turned around, and then we can look at Infosys. But, the downsides could be very limited.
Jay, two factors actually were playing out in our favor, though the Indian markets didn't react that much. In fact, we underperformed. One was the dollar index that had cooled off substantially, and the other was Brent crude prices. Now, the dollar index is creeping up. It went to around, I think, 100.5, and then it cooled off overnight. Do you think that's seeing some resistance at around 101, or do you think the dollar index can return back to be boss? That is, say, move to around 105, 110 odd mark.
Yeah, that's a very important point that you're making. 101 has got multiple resistance out there. If you look at the long-term charts, it's come down from this level of 101 several times. So, it is facing a bit of resistance there. But I think the dollar index on a short-term counter-trend bounce, that could take the dollar index to close to 103. But, that will have a positive impact related to commodities in the sense positive for the equity markets. That will push the commodity complex lower as the dollar index continues its counter-trend move. I expect that to put pressure on precious metals and crude because most of them are priced in dollars. So it's doing a counter-trend bounce. 101 is a very important resistance. But it's still not done in my opinion. If it were to close below 98.5, then we can revisit this thesis.
Okay, Eternal, big move today. It's a 40% correction from the top. So it's oversold, but does it have more legs to go?
No, not yet. It needs to go down to at least 190s and change for it to complete the correction. The medium to long-term picture, though, is very good. Because it's rallied from its post-listing low to record highs of about 360 in a five-step fashion. So this is undergoing a medium-term correction. So this is a short-term bounce and a counter-trend bounce. I would anticipate Eternal to drop to at least to 190s before resuming its long-term uptrend.
Okay, all right, Jay, we appreciate you joining in and giving us your take on the market mood, as well as the calls you're making both on Brent as well as on dollar index. And as you said, see you next in April, the new fiscal year. Hopefully, it'll make you as well as all the investors that watch us a lot of money. Catch you soon. Time to wind down the markets. Another day when the markets ended with solid gains of around 150 points. Well, I'll tell you what, we came off closer around 80 points in the highs of the day. That said, a few stocks did very, very well in today's trading session. Some of the badly beaten down stocks, they bounced up. Eternal was up 5.5%. Tata Steel, Tisco did the disco, up 4.5%. Mahindra & Mahindra is gradually pulling back post the recent correction. That's up closer to around 3%. And HDFC Life, that is well up 2.5%. What did do well? Well, tech stocks actually did come in for selling. Wipro, Infosys, TCS, all of them were down in trade. But keep in mind, actually they've relatively outperformed for the month of March itself. From the broader markets, a lot of stocks did a thing of their own. Well, in terms of big movers in today's trade from the broader markets, you had stocks like SAIL that was up 6%. Metals actually bounced back. The last 4 trading sessions, I think the index itself was down close to around 8-9%. And now, in fact, you had SAIL, NALCO, MCX as well, another commodity play as well as Tata Steel did well. EMS stocks post the correction, they have bounced up. Whether you look at Amber, that one as well did pretty well. And APL Apollo Tubes, that one as well did do pretty well. Rima, what else?
Well, defense stocks across the board saw a lot of buying. So we had Idea Forge, Data Patterns, MTAR Tech, Mishra Dhatu, Garden Reach, BEL towards the end also saw some order win to the tune of about 1,000 crore. The IT index ultimately ends with a cut of about 1%, but there was still a recovery of 1.5% from the day's low. But you had softness in many mid-cap names like a Tata Elxsi, a Persistent, and Oracle Financial, Hexaware. These are stocks